Okay, now come to your textbooks. We're going to take the last question. That is question number 10 on page 61. Come to that question. Page 61, question number 10. Let's read and get all the information that we require. Shipra and Manisha are partners sharing profits and losses in their capital ratio. Very important. Later, when we have to divide net profit or net loss, we are going to use capital ratio as the point for distribution. So we will have a look at the capitals and get our ratio from there. You are required to prepare the trading account and profit and loss account for the year ended 31st March 19 and a balance sheet as on that date. So the trial balance given to you. As usual, quickly you tell me where these items are going to be written. Starting with the debit balances, tell me, debtors, where will you write?
Asset.
Yes, asset. Then purchases.
Trading account.
Furniture.
Asset.
Plant and machinery.
Assets.
Assets.
Wages.
Trading account.
Okay. Salaries.
Profit
and loss.
Discount.
Profit and loss.
Bills receivable.
Assets.
Good. Carriage outward.
Profit and loss.
Profit and loss.
Postage.
Profit and loss.
What will you do with sales return?
Minus from credit side of trading account.
Okay, so in the credit balances, you see sales, put a tick mark, you know you have to deduct the returns. Good. Then the next two, cash in hand and cash at bank.
Assets.
Both are assets. Then insurance. Profit and loss account. Insurance is an expenditure. Opening stock.
Trading account.
Trading account, the first item on the debit side is opening stock. Then trade expenses.
Profit and loss account.
Profit and loss account. Warehouse rent.
Trading.
No, warehouse.
Profit and loss
Profit
account.
and loss account. Advertisement.
Profit and loss account.
Loss account.
And the last item, building.
Assets.
That is an asset. Okay, debit balances are over. Same thing you do and tell me now for the credit balances. Where will you write? Sales.
Trading account.
Trading account.
What about rent?
Profit and loss.
Profit and loss account. Rent given in the credit balance, which means this is income. Rent received. Rent can be an expenditure also, and rent can be an income also. So this, what is you see in the credit balances, that is rent received, an income, which will go to profit and loss account on the credit side. Okay, continue. Sundry creditors.
Liability.
Liability. What to do with purchase return?
Deduct it from purchases.
Deduct from purchases. In the debit balances, tick mark purchases. Good. Then discount.
Profit and loss.
Profit and loss account credit side.
Credit side. You see both places there was discount in the debit. That is discount allowed, discount given, which is an expenditure. Discount in the credit balance means you have received discount, which becomes our income. Profit and loss account credit. Then bills payable.
Liability.
Capital account, the first item on the liability side. And current account, we will open a separate account for the two partners and record their balances there. Okay, trial balance is complete. Below, let's see what all adjustments are there. As usual, the first one, closing stock. Stock on 31st March 19 was 37,000. Point number 2 is a new adjustment. We are going to have a detailed discussion of point number 2. For now, let's see what is given there. Sales includes sale of machinery of rupees 2,000, which is sold on 1st April 2018. So this is the new adjustment. Two items to tick mark from the trial balance. Remember, one is sales and one is machinery. So let's go to the trial balance. We have to adjust sales. So put second time tick mark on sales, and plant and machinery. That item also you tick mark. What is the adjustment to be done? We will see when we get to that point. Further, point number 3, depreciation on fixed assets at 5%. Now the question here is, they only said depreciation on fixed assets. The question is, which are the fixed assets? You have to decide which are fixed assets out of all of the items given to you. All of them are definitely going to be in the debit balances side. We have already written all those items which are assets. All those places where you see A, those are your assets. But out of them, which are fixed assets on which you are going to provide depreciation? Let us mark those items. So can you tell me, looking from the top, which are fixed assets? Which do you think are
Furniture.
fixed assets?
Furniture,
machinery,
building,
Okay. So I will tick mark. Furniture, you said that is correct. That is a fixed asset. Put a tick mark. Then next,
Plant and machinery.
plant and machinery is a fixed asset. Put a tick mark. Second time there. Any
Building.
other?
building,
Yes. The last item there, building, is also a fixed asset. Very good. So these three are the fixed assets on which we are going to provide depreciation. Good. Then point number 4, we have seen in the previous class. Repetition. Have a look. Each partner is entitled to get commission at 1% of gross profit and interest on capital at the rate of 5% per annum. Both of these are incomes of the partners, but expenditure for the business, and it will affect our current account. Both these adjustments we have done earlier. Today we get a chance to do it again. Then point number 5, again, that is usual. Outstanding expenses, wages and salaries. Tick mark both those expenses. They are outstanding, not yet paid. So both of them to be adjusted. And the last one, create a provision for doubtful debts at 3% on sundry debtors. Provision for doubtful debts means they're talking about RDD. That is the only adjustment on debtors. Tick mark sundry debtors in the trial balance. Okay, that's it. Now we are ready to prepare our solution. But before that, certain things to be written. That for whom you are preparing, the two partners, Shipra and Manisha, and the year ending is 31st March 19. So those details, let us quickly write in our solution. Right up in the books of Shipra and Manisha. Then trading and profit and loss account for the year ended 31st March 2019. Balance sheet also as on 31st March 2019. And the moment you see anywhere in the question the mention of current account, you know that capitals are going to be fixed. So on the liability side, the first item, capital, without leaving a line, one below the other. The first partner is Shipra and second partner, Manisha. In current account also, write the name of the two partners. Okay, let's take the trial balance now and one below the other. Take those items there from the debit balances first. The item first is sundry debtors. That is an asset in the balance sheet. Right on the asset side, debtors. It has one adjustment right in the inner column, 28,000. Then next is purchases, trading account, debit side. Two purchases, again inner column, there are returns, 55,000. Next, furniture is an asset back to the balance sheet, write down furniture. Inner column 38,500. Below that, plant and machinery, same place. Now, if you have a look, plant and machinery has two tick marks. There are two adjustments. Write in the inner column first 60,000 and leave 3 lines after that. Whenever there are two adjustments, one extra line is to be left. Total will be taken for the first time in the inner column itself. Okay. Then next is wages. That is an item in trading account. On the debit side, write down 2 wages. This also has an adjustment, inner column 800. Next is salaries. That goes to profit and loss account. 2 salaries. Inner column 3,500. Then discount. Continue in profit and loss account. 2 discount. Amount is 800. Bills receivable. That is an asset. Amount in the outer column 14,400. Then carriage outward, back to profit and loss account. 2 carriage outward. Amount is 1,000. Below that, postage. That is 500. Then comes sales return. In trading account, the first item on the credit side is sales. Below that, write down less returns. Amount is 500. Then the next 2 items, both are assets, cash in hand and cash at bank. Back to the balance sheet. Asset side, write down first cash in hand. $4,000. Below that, cash at bank. That is 47,000. Next is insurance. That is in profit and loss account. Write down 2 insurance. $2,000. Opening stock, the first item on the debit side of trading account. Write down opening stock 17,800. Then the next 3 items, all in profit and loss account. Trade expenses. $1,500. Next is warehouse rent. That is 2,500. And advertisement. Amount is 1,000. Then the last item there, building, that is an asset. This also is a fixed asset, which will have depreciation. So write in the inner column, building 20,000. Okay. Now we move on to the credit balances. The first item there is sales. In trading account, we have already written by sales. Amount is 1,20,000. Deduct the returns, but take the balance in the inner column itself. There are 2 tick marks on sales. There is one more adjustment later. So deduct and tell me sales in the inner column, net sales.
1,19,500.
1,19,500. Below that, you leave one line and continue. Next is rent, that is an income. So in profit and loss account on the credit side, first item always you leave for gross profit. Below that, write down by rent, 1,800. Then is sundry creditors, that is a liability. Below capitals, you don't have to leave a line. Directly, the next item is creditors. Amount is 38,500. Then next is purchase return. We will deduct that from purchases. In trading account, write down below purchases minus returns. That is 1,000. Deduct and tell me net purchase in the outer column.
54,000.
54,000. Then discount, that is another income. So in profit and loss account, below rent, write down by discount. Amount is 500. Next, bills payable. That is a liability. Below creditors on the liability side, write down bills payable. That is 9,000. Then capital account of the 2 partners directly on the liability side, one below the other. Shipra 90,000 and Manisha 30,000. Add up and tell me the total capital of the 2 partners.
1,20,000.
1,20,000 in the outer column. And then the last item is current account, for which we will first prepare a separate account. Current account. Can you tell me where those balances are going to come, which side?
Credit side.
Yes, you are on the credit balances side. So whenever you pick up an item, it has to go somewhere on the credit side. So come to the credit side of current account and write down by balance brought down. This is the balance currently that is available in current account. For Shipra, write down 5,000. And for Manisha, it is 3,000. Okay, trial balance is complete. Now we move on to the adjustments. Point number 1, stock on 31st March 19, that is the closing stock is 37,000. Tell me, first effect, where will we write closing stock?
Trading account, credit side.
Credit side of trading account. After leaving about 2-3 lines, the last item is going to be closing stock, right on by closing stock. That is 37,000. And what about the second effect?
Asset side.
Closing stock is an asset. Come to the balance sheet asset side and write down closing stock 37,000. Okay. Now point number 2, extremely important. This is the new adjustment. So pay attention. Don't write anything. Just pay attention. Point number 2 says sales include sale of machinery of rupees 2,000, which is sold on 1st April 18. Okay. Sales include. So firstly, when you come to trading account, there is an item of sales. And they're saying this sales includes sale of machinery, and that itself is the error. Whenever we record sales on the credit side of trading account, that is sale of goods only. Okay. Machinery is an asset. You do not record sale of machinery along with sale of goods. That would be incorrect. Whatever goods you produce and sell every day, only that comes in trading account. I told you trading account has information always only relating to goods, whether it is opening stock or purchases or sales or closing stock or goods taken away for personal use, goods destroyed by fire. Every time it includes only goods. Machinery is not goods. Machinery is your asset. So you cannot record sale of machinery along with sale of goods. So that is the error firstly done. Sales include sale of machinery. So if this sales already has sales of machinery, your objective is to remove that type of sales which is not of goods. So first effect is get rid of those sales which is not goods. So deduct from here minus, write down sale of machinery. If it was sale of goods, we would have kept it there. It is sale of machinery. You remove it from there. You cannot record sales of any other item except goods in trading account. So remove it from there, and that amount is 2,000. So deduct, and now you will be able to find only sale of goods. So deduct and tell me what is sale of goods there in the outer column.
1,17,500.
1,17,500. That is correct. This is one effect. Okay. Now, because you had made an error, you had recorded sale of machinery in sale of goods. So firstly, our objective is remove sales which are not sale of goods. That we have done. But remember, sale of machinery means your machinery value should have reduced, which is not done. By recording it under sales, you did not remove it from machinery which is on the asset side. That is still at 60,000. If it was sold, your machinery value should have reduced. So if it was not reduced earlier, now you reduce it. So from plant and machinery, deduct the value of machinery which was sold. So here also write down minus sale of machinery. That is 2,000. And when you deduct, again take the balance in the inner column itself. Now your machinery, which should have been recorded correctly, that value should have been 58,000. I'm going to explain this again because this is a new adjustment, important. You will not get to see this in every question. Okay, but before we move on to that explanation again, just check, have you done both the debit and credit effect? Have you done it equally? Answer is yes. Where have you recorded sales? It is on the credit side of trading account. And you have removed some item from there. So from credit side, you have deducted. And from the asset side also you have deducted, but you know that in the balance sheet, your asset side is the debit side. So you have deducted an item from both credit as well as debit. Is this okay? Answer is yes, because now both sides are still equal. And equal amounts you have removed. From credit side, if you remove 2000, then from the debit side also you should remove 2000. And that's what is done. Now, the explanation again, why we have done what we have done. Firstly, understand what is the error. In trading account, I told you that sales or purchases is only of goods. So anything other than goods do not include it in trading account. So if it is included, your job is to remove it. So you have removed it from sales. And now you have recorded sales correctly. But from where it should have been minused? It should have been minused from machinery, because that is the item which is sold. So machinery value should reduce. So by reducing it from machinery, you have done even the second effect. Reduce from sales, one effect. Reduce from machinery, that is your second effect. And now your error is rectified. Your error now is corrected. Is that clear? Take a minute and tell me whether you have understood this adjustment, why it is deducted from sales and why it is deducted from machinery, the two effects. Have a look. Yes. Any doubts? Does anybody have a doubt regarding this transaction? Okay. So has everybody understood? Yes or no?
Yes, sir.
Okay. That's it. Point number 2, that adjustment is complete. Then we move on to the next. Now, depreciation, you already know what is to be done. The asset value has to be reduced, and they said depreciate all fixed assets by 5%, one rate. So let us take each asset and reduce the value now. Starting with the first one, you see furniture is there written in the inner column, right down, minus depreciation. Okay, now carefully calculate and tell me what is going to be the depreciation on furniture. 38,500 is the value. On that, take 5%. Tell me how much that is.
1,925.
1,925 deducted from there. 1,925.
36,575.
36,575. Okay. Each one do your own calculation and verify whether you are getting the same result. That way we all will have the same answer. So please do your own calculation. Okay, one asset, we have done the depreciation. Let's move on to the next. You see there is plant and machinery. Right, minus depreciation. This time amount is 58,000. So take 58,000 into 5%. The new balance of plant and machinery after making that change is 58,000. On that, you take 5%.
2,900.
2,900. Deduct and tell me in the outer column.
55,100.
55,100. And then down below, there is one more asset, that is building, which is 20,000. So take 5% of 20,000.
1,000.
That is 1,000. So deduct. Right. Minus depreciation. 1,000. Deduct. How much is building in the outer column?
19,000.
19,000. Three assets. We have reduced the value because of depreciation. That is one effect, reducing the value of your asset. Now, the second effect, because it is a loss, you record in profit and loss account on the debit side, depreciation. And we will record all of them together. So in the inner column, first we will write down to depreciation. First one was furniture. That was 1,925. Then was plant and machinery. $2,900. And finally, building. That was 1,000. If you add up, you will find out total depreciation on all assets. Yes, how much is that?
5,825.
5,825. Okay. Two effects of depreciation done. Move on to the next one and point number 4. Each partner is entitled to get commission at 1% of gross profit. This adjustment we cannot do right now because gross profit is missing. So leave that. But the next part says interest on capital also is to be given at the rate of 5% per annum. That we can do right away. Interest on capital, remember, will become income for the partner. They have given money to the business. Every year, they take away some interest. But for the business, they have used that money. It is their job to pay interest. So for the business, it is an expenditure. One effect will be profit and loss account debit. This is where we record all expenses. So here you write down 2, interest on capital. Whether you pay interest to the bank or whether you pay it to the partners for providing capital, both are expenses. 2, interest on capital, and you need to give it for both the partners. Write down Shipra and Manisha. Now, the rate of interest is 5%, but you need to calculate that on their capital. So tell me, how much is Shipra's capital? Have a look in the balance sheet and tell me Shipra's
90,000.
90,000.
90,000 at the rate of 5% comes to how much?
4,500.
4,500.
4,500. And can you tell me how much is Manisha's capital?
1,500.
1,500.
Okay, her capital is 30,000. So interest at the rate of 5% is 1,500. That's correct. Add up and you will get total interest in the outer column, that is 6,000. This is one effect. The debit effect is over. It is an expense for the business. But those partners are receiving interest. For them, it is an income. Credit all income. So go to current account and you will write on the credit side, buy interest on capital. Amounts were 4,500 for Shipra and 1,500 for Manisha. Okay, later when we calculate commission, same 2 effects are going to be done. For the business, it is an expense. For the partners, it is an income. Okay, but that will be later after calculating gross profit. So that point we are keeping pending for now. Let's move on to point number 5, which is the regular adjustment of outstanding expenses. The 2 expenses here are wages and salaries. Firstly, for wages, which is in trading account, write down, add outstanding. Wages outstanding is 200. Totally, when you add up in the outer column, wages is 1,000. Same thing for salaries. There also write down plus outstanding. Salaries outstanding is 500. Add up and total salaries in the outer column is 4,000. one effect is done. Outstanding means it was not paid. So expense was recorded less. You have added and now recorded the expense correctly. Second effect, that expense is not yet paid. Money has not gone out. It will go out in the future, which means it is a liability. Any amount payable in the future is a liability. Write down outstanding expenses. One below the other, first in the inner column, write down wages, 200. And below that, salaries, 500. Total outstanding expenses, 700. Okay. Two effects are done. Point number 6 talks about RDD, which has to be done on debtors. That also we have done in almost every question. RDD is a loss that may happen in the future. You first only reduce the value of your debtors. Come to the asset side and write minus RDD, reserve for doubtful debts, to be created at 3% on debtors. So take 28,000 and find out how much is 3% of that. Anybody?
840. 840.
840. Deduct and tell me debtors in the outer column.
27,160.
27,160. Okay. This is one effect. Where is the second effect of RDD?
Profit and loss
Profit and loss account.
Debit side of profit and loss account. Yes, write down 2 RDD. Whenever asset value is reducing, whether it is because of depreciation or on debtors, whether it is because of bad debts or RDD, asset value is reducing, which means it is your loss. 2 RDD, amount was 840. Okay. Now all adjustments are done except one, and that is in point number 4, commission, which is on gross profit. So to find that out now, what we will do is close trading account first. All other adjustments are done. We can close trading account. So find out which side is greater. Add up the debit and credit and tell me how much that is.
Sir, you've missed one thing in trading account debit side.
What is that?
Warehouse rent.
Warehouse rent we have taken to profit and loss account. That is not in trading account. Factory rent and warehouse rent, they are two different things. Okay. Whenever they talk about factory, that will go to trading account. Warehouse is somewhere where you only store goods. Your goods are already finished being produced or manufactured. You are only storing them there. So warehouse will never come in trading account. Okay. It has gone to profit and loss account. We have recorded there. If you have taken it to trading account, make that change. It comes in profit and loss account.
Yes, sir.
Okay.
So credit side total is 1,54,500.
1,54,500 credit side. What about debit side?
72,800.
72,800. Check everyone. Are you getting the same totals?
Yes, sir.
Okay. So
Yes,
credit
sir.
side is greater. Write that total on both sides. 1,54,500. Also on the debit side, 154,500. And debit side is less. That's where we write the balancing figure, gross profit. To gross profit carried down. To find out, deduct the debit total from the credit. How much is that?
81,700.
Yes, what was that?
81,700.
81,700. Okay. That is your gross profit. So write down 81,700. Bring down that gross profit in profit and loss account. By gross profit brought down 81,700. Okay. Now that we have gross profit, we can calculate commission, which has to be given to the partners. And that is an expense for the business. So one effect, profit and loss account debit side, write down to commission. The commission amount is going to be same for both the partners, Shipra and Manisha. Now, to find out the amount, it is said in point number 4, it is 1% of gross profit. Gross profit was 81,700 into 1%. What is the amount?
817.
817 for Shipra and same amount for Manisha. Add up and you will find out the total commission.
1,734.
1,734. This is one effect, expense for the business. But for the partners, it is an income. Where is the second effect?
Current account credit side.
Credit side of current account. Just like you wrote interest on capital, now write down by commission. Both partners get 870. 1% of gross profit.
Sir, commission total is wrong.
Commission total is 1634.
Commission
Yes, sir.
total is 1634.
1634.
Okay, make that change. That's right. 817 into 2, 1634. Okay. Two effects of commission also is done, and all other adjustments we have already finished. Now we can close profit and loss account also. Same process, find out what is the credit side total and what is the debit side total. Add up carefully and tell me.
Credit side is 84,000.
Yes, sir.
Credit side is 84,000. Okay. Debit side, more items are there. Add up carefully.
Is it 17,599?
17,599. I've written it here. Please check everyone and tell me whether it is correct.
So it's 21,599.
21,000.
Yes, sir.
Check everyone. Credit side is definitely 84,000.
It's 27,599.
Three different answers I'm getting. Please check what is the debit total. Is it 27,599?
Yes, sir.
Okay. Then credit side is greater, write that total on both sides, 84,000. And debit side was less. You have net profit, which will be distributed for the two partners, Shipra and Manisha. First, let's find out the total net profit. Deduct the debit from the credit and find out how much is net profit.
56,401.
56,401. I hope everybody is doing their own calculation and then checking whether you are getting the same answer. Do that.
Yes, sir. 56,000.
56,401. Okay. Now we need to distribute this between the two partners, Shipra and Manisha. Can you tell me what ratio you are going to use?
3:1.
3:1. That is correct. And now for understanding, how did you get 3:1? In the first line of the question, they have said profit or loss has to be shared in the capital ratio, and capitals you already know. For Shipra, capital was 90,000, and for Manisha, capital is 30,000. If you simplify that, the ratio is 3:1. That is correct. 3:1 is the profit sharing ratio. Now let us divide the total net profit in this ratio, 3:1. So which means you will be dividing the total net profit by 3 plus 1, and that is 4. Divide by 4 and tell me. I think you'll get it in points. Decimal points will be there. Just tell me the division.
14,100.25.
14,100.25. Okay. Take that 14,100.25 and you have to multiply it by 3 and multiply it by 1. When you multiply by 1, you always get the same, of course, 14,100.25. Multiply by 3 and tell me how much that is.
42,307.75.
42,300.75. That is correct. Okay, but we don't want to write decimal points, so we are going to have to round that off. Whenever it is 0.5 and above, we will take the next digit here. So it will be 42,301. But for Manisha, it is less than 0.5. So you ignore that. It will be 14,100. Those are the two amounts after distribution of net profit. So write down for Shipra, 42,301. And Manisha is 14,100. That's how when you add up, you will get the total 56,401. Check. Is everybody getting the same net profit? And your division also should be correct.
Can you please show the entire profit and loss account once?
Okay, entire profit and loss account. Have a look, credit and debit side.
Got it, sir. Thank you.
So please can you show current accounts?
Current account we are going to write now. Just 1 minute, hold on. First tell me, has everybody written net profit in profit and loss account, distributing it for the two partners? Has everybody finished this calculation?
Yes, sir.
Yes, sir.
Okay. Now the second effect. Net profit is income of the partners. So you are going to write it in current account on the credit side. And I told you balances are always moving from one side of the account to the other side. You are right now on the debit side where you have found out net profit. This will be picked up and written in the credit side of current account. That also is income of the partners, right, by net profit. Okay. One of you just tell me how much was net profit for Shipra?
42,301.
42,301, and for Manisha it was 14,100. Okay, now we close current account and there are no transactions on the debit side. Add up in each column and tell me what is the total. First for Shipra.
Okay, it's 52,618.
Please repeat that. How much is the total? 40?
52,618.
52,618. Okay.
For Manisha, it's 19,417.
19,417. Check everyone. Same totals you will write on the debit also. 52,618 and 19,417. That itself will become the balance at the end. So write down to balance carried down. There are no debit items to subtract. So your end balance is the same, 52,618 and 19,470. Okay, this balance at the end, can you tell me where you are going to write these balances?
Balance sheet.
It in the balance sheet, which side?
Liabilities.
It will be on the liability side. Just now I told you balances are moving from debit to credit always. If you have a look, gross profit, whenever we found it was in the debit, move to the credit side of profit and loss account. Net profit from debit of P&L to credit of current account. Now again, you're going to pick up from the debit and move to the credit. And in the balance sheet, the liability side has all the credit balances. So you are going to pick up these balances and write on the liability side. Write up current account in the inner column first. Write up for Shipra and Manisha. Amounts were 52,618 and 19,417. Just add up and tell me the total current account balance.
72,035.
72,035. Okay, that's it. Now, the last step is to find out whether the balance sheet tallies. Both liabilities and assets should have the same total. Add up and find out.
Liability side total is 2,40,235.
2,40,235. Okay. What about the assets?
Asset side total is the same.
Same, 2,40,235. And that's it. Your balance sheet has tallied. Both assets and liabilities have the same total. Now your solution is complete.